Welcome back. Telecom operator Etisalat confirmed today that it has sold a total of 775 million shares in PTXL Axiata Tbk, one of the group's 16 operating companies and located in Indonesia. The 775 million shares represent a total of 9.1% of XL's issued share capital, representing a value of approximately 1.8 billion dirhams before commission and expenses. The settlement of the placing is expected to take place on the 18th of September. Following the completion, Etisalat will hold a 4.2% ownership stake in XL. According to a local paper, Etisalat spent more than 46 billion dirhams between 2004 and 2009 on acquisitions of companies, licenses, minority holdings and investments. CFOs in the Middle East reported the highest level of optimism during the second quarter of 2012 compared to 11 other locations around the globe surveyed, according to the Deloitte Global CFO Signals report. The CFO survey gathered by Deloitte from around the world weighed up attitudes towards the general economic outlook, financing valuations and risk. Pessimism amongst CFOs globally, though, is growing, having increased from the first quarter of 2012. That's what James Babb, the Deloitte Middle East CFO program leader, says. This comes off the back of the Eurozone debt crisis and slowdowns in China and India. For the Middle East, though, the price of oil and market growth in the region continues to bolster optimism, with 60% of CFOs expecting the levels of mergers and acquisitions in the MENA region to rise, up from 43% in Q3 2011. Priorities for the next 12 months include increasing cash flows and cash balances, reducing costs, as well as selective acquisitions funded internally. High oil prices, a growing non-oil economy, and major investment in transport and power infrastructure projects are driving business travel in the Gulf region once again. Per diem rates are up as GCC budget surplus is fueling massive infrastructure projects and is putting executives back in the air. That's according to the organizer of the 2013 edition of the Incentive Business Travel and Meetings exhibition. Experts say that according to analysts by the Emirates Centre for Strategic Studies and Research, GCC budgets doubled in 2011, producing a $106.7 billion budget surplus. And that was after a 19.3% increase in public spending over the previous year. One non-oil economic sector that is benefiting from increased commercial activity is aviation and hospitality, particularly from corporate travellers, keen to tap into the region's business markets as business opportunities in some of the more mature economies dry up. According to BCD travel consultancy Advito, hotel rates for business travellers in the Middle East will increase 6 to 7% this year. And let's now take a look at the stock indices across the GCC.